Welcome, friends, it's me, the Crypto Maxi. In today's video, we're discussing whether we might have already hit the peak after all. We're going to talk about some indicators that definitely suggest that, and we'll take a closer look at them. Because there are venture capital firms that believe the peak has been reached, you need to change your perspective, and I always find that interesting. I like to listen to other opinions as well. Today, we're going to talk about some things that support the idea of a Bitcoin bull run peak. And at the end of the video, I will also show some things, in my opinion, definitely argue against it. We're going to look at both sides because I think it's important to consider this neutrally sometimes and from several sides, because there are also many indicators that have been signaling, which could theoretically suggest a bull run peak already. And before we continue, friends, you know what to do. Give the video a like and leave a comment. This video took a hell of a lot of work, and I would appreciate it if you value that effort. Then I would say, let's take a look at this PDF file. From a renowned VC firm, they believe that the peak is definitely in. Here in the background, you can see a chart that we've been tracking since 2013, 2017, and 2021. And you can see that the newer coins are performing better than the established ones. Those are signs, also, signs of a bull run. One sign is that smart money is moving more towards the new coins. Above all, that's really an important sign. It shows that Donald Trump has made more money from his meme coin than from his entire life in real estate. And actually, Donald Trump comes from the real estate sector and became a multi-billionaire through that. But they are probably right. He probably made a lot more money with his BIM coin. What's absolutely crazy is Trump launched his BIM coin on January 17th. Launched in January. 2 days later, they launched the First Lady's BIM coin. Yeah, and in the end, a huge amount of money was just pulled out. And that alone has massively harmed the crypto market. A lot of liquidity has been shifted, and that caused long-term damage to the crypto market, and to be honest, that was an action by Trump. I still don't think that's good at all. It has drained a lot more money out of the market than it has brought in. Here you can also see how the two meme coins have performed. It's absolutely ridiculous what has happened here. You could almost call the whole thing a rock pool, I would say, because I mean, in the end, yeah, what else is it? They held up to 80% of the supply, made a lot of money, very, very bad. But I think it's cool that they mentioned this here, specifically the upcoming new ETFs. So there are mainly ETFs related to Bitcoin, Solana, XRP, and so on. There are some applications that could become relevant in the near future. You shouldn't miss that because I think some altcoin ETFs could give the altcoin sector another boost. But we definitely need to take a look at that. It would be really interesting. What makes them bearish again is the fact of the ETF introduction. These Bitcoin ETFs were the most successful ETFs in the world. You can also see this volume here, how it has built up. But the thing is, here you can clearly see that most ETF investors are massively in the plus. And that's where it gets interesting if you want to cash out a bit in the near future. We are still seeing inflows, but the inflows have decreased significantly. It is more of a stagnation phase at the moment. Just look at this. We really haven't seen much happening here for weeks. So we're not seeing any significant inflows into the Bitcoin ETFs, and that's a dangerous sign. Then take a look at this when we saw a stagnation phase. With Grayscale, Bitcoin in 2021, so this phase, we also slowly started to see the top, and then we slipped down. So if we don't see any institutional money in the market anymore, it's going to be very difficult because this money has been pushing us around the whole time. Right now, we are still seeing some inflow, but we're slowly entering a stagnation phase with the ETFs, where we are seeing inflows, but they are no longer significant. And here it gets interesting to see if the tide will turn again, whether we can keep pushing forward with further new capital from institutional investors, or whether the institutions really have no interest in getting in anymore. That would also be a top signal, to be honest, especially because we've seen a lot of interest lately. We've also noticed that 8 out of the top 10 finance apps are crypto trading apps. This means that the crypto market has really made its way into the mainstream and has already attracted some retailers. That's definitely a small sign that we might have already seen the peak because we've just seen a lot of retail in the market. There have definitely been signs that indicate a local top or even a small Bitcoin top. Just the fact that someone like Michael Saylor is already in Forbes, that was a top signal in the past when Sam Bankman-Fried was featured in Forbes. We had the peak in a month later. Exactly, here I have the picture again. The Forbes is actually a sign that we might already be at the top signal, and we've seen a lot of such signals lately. We've seen a lot of signals where you could say, hey, this is so positive, it could maybe indicate a Bitcoin peak. Just the future open interest, it's 3 times higher than in 2017. And that also suggests that we are definitely already fully in a mature bull run here, maybe even at the bull run peak, because it's really intense that we're standing here 3 times higher, like in 2017. But even if the institutions are easing off a bit and retail has started to accumulate a bit more, you have to say the largest capital is still coming from institutions, and in my opinion, that's the more important point here. And it could very well be that we are currently in the next staging phase, that we are stuck in here, and maybe that's also why the ETFs are stagnating a bit. But if we see the turnaround, maybe then we'll see further inflows into the ETFs and so on. It may simply be that this phase will have to last a few weeks again, and then we might see the next turnaround as a result. Because now let's talk about a few things that, in my opinion, do not indicate a Bitcoin peak, because I think it's important to look at all sides. And I would find it wrong to just say, no, the Bitcoin peak isn't in. Imagine if I didn't show you all of this. That would be so wrong of me. I think we should really consider everything and take everything into account. Just to show you a few indicators that would be important for the Bitcoin peak. These are the numbers of new addresses, plus that hold Bitcoin. And look at this, in 2017 during the bull run, it escalated like this at 2.21 and at the beginning of 2.24. But also, look at where we are right now. This suggests that we don't really have significant retail presence in the market. We do have retail in the market, yes, but it's not as significant as in the last cycles. And even when you look at crypto globally, we definitely had significant retail demand here, but we definitely haven't even reached our peak from 2.1 here. That means there will be more retail in 2021 than there is right now, and that just can't be the case. I'm sure that nowadays we would get at least twice as much retail in the market as we did in 2021. Because we've also added Instagram, TikTok, and so on, I believe we should theoretically have a lot more retail in the market. And the fact that we haven't even broken the peak from 2021 suggests, in my opinion, that we haven't seen the peak yet. Moreover, there are simply too many charts that would argue against it. For example, the MVR score. Here we can clearly see a trend reversal line that has held for decades. We definitely haven't tested this trend reversal line yet. However, we are still in an upward trend here, which is important. And theoretically, we should arrive here at some point. And in these areas, we would then have Bitcoin prices of over $140,000. So with the MVR score, we definitely still have room to grow. Just like with the peak cycle top indicator. Here we haven't even crossed. The P cycle top indicator is an indicator that has never been wrong in the past. Why should it be wrong this time? Even with the 200-week moving average, we can see that we're still not in the overheated zone here. There are simply too many indicators that argue against it, especially in terms of time and data. Here, we saw our Bitcoin all-time high every time 17 to 18 months after the halving, and we're currently just barely in the middle. That means we theoretically still have 6 to 7 months ahead of us, which should actually be looking positive. Those are just facts. Facts. The facts that we've always had like this in the past. It was the same in every bull run, and those are already very significant facts. Of course, there's a chance that this could already be it, but I think the facts that argue against it are clearly stronger than the facts that currently support the Bitcoin top. What I could rather imagine is that this has been the local top for now, and that we're stagnating for now, but once we see the breakout, I can easily imagine that we'll quickly escalate again, because the market has changed a bit. We're escalating a bit faster now. As a result, we often get these stagnation phases afterwards. I am and remain optimistic. There are things that support the Bitcoin peak. There are things that argue against it. Everyone should form their own opinion. I think it's important to address everything here. I hope you enjoyed the video so far. Thank you very much for watching, and see you next time, friends.